And I wanted to take a look at Bitcoin today because Bitcoin's kind of taking on the chin. Today is November 15th. It's Thursday. And what's really happening here with Bitcoin, this is a pattern that has displayed itself as long as I've been trading. It's a very common pattern. It typically ends with a fairly predictable price movement. And it happens in pretty much every asset class, and it has happened since I've been reading charts. Go back in history as far as we have charts, and you can see this pattern present itself over and over again with fairly predictable consistency. And so what's happening here is you saw Bitcoin has moved down from about the 19,050 level, and it came down to about 6,500, and it's traded sideways in this sort of triangle pattern. And this will typically resolve itself to the downside. And let's look at a few examples so we have an idea what history says might happen with Bitcoin. So here we have a daily chart of the XHB. It's the Home Builders Trust. Every candle is a day. And this is from basically the beginning of 2018, so fairly recently. And you can see, much like Bitcoin, the XHB came down in one initial move in January of this year, early January, came down, traded sideways until about the end of September, and then moved lower. So I labeled on the chart where I think we are with Bitcoin. You know, Bitcoin came down, and we'll go back to the Bitcoin chart at the end of this, but Bitcoin has come down, moved sideways for a significant amount of time, and then has recently broke out of this consolidating triangle. So I put on here where I think Bitcoin is right now, and you can see when the XHB broke out of its consolidation sideways in this zigzag pattern, which is what this is, this A, this being a B, and this being the final C move lower. You can see that it typically falls about the distance of the A wave. Let's go ahead and measure that and see what that actually comes out to be. And this is a little subjective getting the A right, but if we think it's about there, and then the point where it breaks out right about there. So this being the 100% mark, you can see it almost exactly lost 100% of the move of A. So leg C here was about exactly equal to the leg A here, with the intervening B wave here, this consolidating triangle. And you can see this is a pretty significant fall, an 18% loss in the XHB once it broke out of this consolidating triangle. So it's a pretty profitable move. Typically, what you'll see is when they break out of this consolidating triangle, very rarely does price action ever break back into this zone here. So if you were lucky enough to catch this when it breaks through, you could go short on Bitcoin and put a stop just slightly above the lower trend line, because like I said, very rarely does price action break back into this trend, past this trend line. So a relatively high profit, low risk trade, which as traders, that's what we're looking for. That's what we want. That's where the money is made. And the other thing you can notice is once it does start to move out of this consolidating triangle, the move is very impulsive. Look at that. It doesn't even retrace basically anything for weeks until finally you get a little retracement here in the middle of October. And then once again, the downtrend resumes. Now, my guess is this may be the start of a move higher, but it's just too early to tell. If it breaks above this particular point here, I might consider going long on something like that. But basically, the big money's been made in this move, and I think the big money can be made in Bitcoin if this indeed is a valid chart pattern for Bitcoin. But let's go ahead and look at a couple other examples, because like I mentioned earlier, this is a very common pattern, this zigzag pattern with a triangle for a B wave. It happens all the time, and I have a few more examples I want to cover just to illustrate how potentially lucrative this trading pattern can be if you find it early enough. So let's move on. So this chart here is the ETF FXI. It's the Chinese large cap ETF. Trades here in the States, very liquid. And you can see the same pattern that has happened in Bitcoin has happened in the FXI. And this is again from 2018. You see this initial move lower here in an A wave. You can see this consolidating in a consolidating triangle for a B wave, and then a break lower. And then this is a bit unusual here. You sort of see another triangle sideways for the FXI for a good portion of 2018, the last half. But at any rate, again, once price action breaks out and down through this lower trend line of this consolidating triangle, you can see that it's very impulsive. The move really retraces very little, if any. So if you can catch this again on the down move, it can be very profitable. Once again, high profit, low risk. It really never goes back to touch that trend line. In fact, look at all these gaps in this move lower. Once it touched this trend line, you could have gone short and just rode this thing down. And ultimately, at this point down here, roughly just the 38 level, it represents a 17% loss to this point from the point which it broke out of this triangle at roughly 46. So again, you see that this pattern has repeated itself once again in another ETF. And like I said, you can find this pattern repeating itself on a daily basis. Just do some searching. You can find it in individual issues, stocks, currencies, commodities, indexes, ETFs. Anything that's very liquid, this pattern will show itself. Typically, if you have a market where there's a lot of hedgers, you often don't see quite as nice of patterns. So I would stick to the things where there's fewer hedgers, mainly the indexes, the main indexes, the large liquid stocks, and you'll see this pattern repeat itself over and over again. And on all time frames, you can see it on a 5-minute chart, you can see it on a daily chart, a weekly chart, a monthly chart. Just start doing some research and you'll see that this pattern does present itself over and over again with almost always the same result, a break lower and then some sort of consolidation, oftentimes like this, and then another move lower. This is a little unusual to have this long of a consolidation after this. Typically you'll see a relatively short consolidation in what would be a wave 4 and then a move lower. But at any rate, this position would have been pretty profitable. You get in right at the break, or the other thing you can do, another good way to trade this particular move, is you see where it broke out of this upper trend line on what would have been the E wave. And when it broke back under this, you could have gone short and rode this even lower and profited for that extra distance of, several dollars, at least $2. So again, a very predictable trade for the most part. Anything can happen. Trading is not easy. But there's other examples that I want to cover of the same pattern repeating itself, so let's move on. So this here is a chart of the US oil fund. It's an ETF that essentially tracks the price of crude oil. And of course it's in the spotlight right now for the implosion in prices, but really the implosion came, and I remember this distinctly, in July of 2008. I actually remember the day very well when that reversed because I went short crude oil on that day and rode much of this down, so it was a nice trade. But you can see once it dropped down, there was this very long consolidation from 2009 until basically late 2014. And during this particular time in here, the stock market was really booming and crude oil was trying to find a bottom, and of course it traded sideways in this constricting triangle, just like we've seen in all the other patterns. Very typical, only this was very long. And typically, the longer the basing pattern, the longer the drop will be once it exits that particular pattern. Now again, this was a massive drop. Crude oil essentially fell off a cliff in 2008. What's really troubling about this particular cycle is typically commodities will top after stocks. In other words, there's a time period where stocks will roll over and start to move down when the actual fundamentals of the economy are still sort of chugging along and there's a demand for crude oil. So that's why you typically see crude oil topping after stocks, because the stock market tops roughly 6 months before the general economy does. So the fact that crude oil has basically imploded early here is really troubling. I mean, I think we're on the verge of something that's going to be quite bad for the stock market, for the economy. But until the technicals prove that to me, it's real hard to say exactly if that has started or not. But that will be an upcoming video. But I want to concentrate on this again. So here's where I think Bitcoin is currently. And currently, I mean November 15th, 2018. So you can see this was a massive drop in oil. This was a huge drop in oil here. But after it broke out, it lost 73% of its value. So again, a very profitable trade. And if we zoom in a little closer, you can see very few, if any, retracements. So you could go short crude oil or whatever you're trading when it breaks out of that lower trend line, and really very low risk of price action coming back and stopping you out. In fact, you could even go short once it reaches this top trend line and gain that extra momentum as it breaks down through the triangle. So a great trade. This, like I said, this was a 73% loss in value on this particular ETF that tracks the price of crude oil. And if you were short futures, or you could buy puts on the ETF here, or do a vertical spread, something like that to hedge yourself. Very profitable, low risk trade, and you can literally make a living off just farming for this one particular pattern. It happens in bull markets, it happens in bear markets, it happens in virtually every asset class that trades on an exchange where there's enough buyers and sellers. You'll see this happen. And once again, very profitable. So with the last three examples in mind, let's return now to Bitcoin, now that we've seen some historic examples, and try to figure out where Bitcoin might be going based on what has happened in different asset classes in the past. Okay, so here we are back again looking at the Bitcoin chart, and this is a weekly chart. And like we said before, we've come down in three distinct moves, and then there's A, B, C, D, E for this triangle. And there may be some arbitrary lettering here. The D wave of a triangle typically is the most convoluted and complex of the subwaves. So the idea here is not to get too hung up on the actual labeling of the waves. The fact is, it's a very clear descending triangle, very typical of this pattern, and then a very clear break. The question now becomes, can you go short Bitcoin, or where would Bitcoin be headed? So my best guess, and how I will be trading this particular trade, I'm not short Bitcoin yet, but I may get short here pretty quick, would be to wait for some little bit of a reversal and then a move lower. Once we get a move lower off that reversal, I would be looking to get short. But where exactly would we be looking for Bitcoin to finally bottom out? Well, there's a lot of support down here at the 1255 level. But if you think about that, we're now at 54.91. So we're going down to, if it goes down to 1162, you're talking about an 80% loss in value. And like we saw in the other charts, if wave C, which this could be the start of wave C here, it remains to be seen and anything could happen. But if this is the start of wave C, and if it was roughly the length of wave A, let's see where the chart suggests that price action could ultimately bottom at. And you can see, if price action does get down to where support is, that's still only 38% of the move that brought it down from roughly 19,500 to roughly just under 6,000. So that, being a very conservative estimate, is still an incredible trade. You can make yourself very wealthy off just this one trade if this does prove to be the case. And actually, the price action in Bitcoin down to this point has been pretty clear. I mean, it's not choppy in the sense that it looks corrective here. It's actually quite easy to track that particular price action. But what I'd like to do is zoom in closer onto this most recent price action to see what that looks like and what opportunities might present themselves for the price action right now. So let's go ahead and let's go to an hourly chart and see what happens. You can see once we broke down from that, we got a 1, 2, 3, 4, 5. then an A, B, and this could potentially be a C here. But what I would be doing is if Bitcoin does ultimately break down below this 54.13 level, I'd be looking to get short, or anytime it reverses from a higher level, because this particular move here could be a C. There's not enough of it developed yet to really know if that's going to be a C wave yet. So I would wait for a rollover of price action, a breakdown through this early support level, and then you could go short. And then I would just ride that until you count 5 clear waves, because if this is indeed a C wave developing here, you should get a pretty clear wave count of 1, 2, 3, 4, 5 with very little retracement. That remains to be seen, but as I mentioned earlier, this is a very typical chart pattern. We've seen it many times in history, many different asset classes, and it proves to be quite profitable. In other words, if I had a choice to choose whether I was going to trade the A wave, the B wave, or the C wave, it's a very easy choice. This C wave is where you want to be. It's the most impulsive. It's the easiest to define. It's the easiest to quantify. The A waves can be a little murky. B waves can be very murky. But C waves are typically very clear. So I'm going to try and keep you updated as much as I can here on the Vanport Capital page. If anything changes, I'll bring it to you. But for now, be looking for Bitcoin when the market, and I mean the stock market now, is so choppy. We're in some sort of corrective pattern, and I basically have closed my positions in the stock market until I get a clear wave count for the way I trade. But Bitcoin is presenting an incredible opportunity here, and I didn't want you guys to miss it, which is why I wanted to bring it to you. If you have any questions, shoot me an email. I'm happy to help you out. And don't forget to like and subscribe these videos. I hope I can help you guys out. Like I've said before, there's always money to be made, and I want to bring those opportunities to you guys. Thank you again for watching, and please like and share our videos. Good trading.